General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the chart work. Monday, the 17th. See what happened on NASDAQ. Interesting close. Swept the 20-day IPTA. No new liquidity has been taken. I don't really watch what price does when we take Friday low. We have a good chance to take in Thursday low if Friday low is respected as a resistance level. We can really milk this options expiry, but it start here just because it's still bullish for the flow. So we could sweep Friday low and still buy. But if we sweep Friday low and start selling, that gives this side of the curve for targets. Not too bad. I think we could continue lower, maybe even the event horizon is the next key level. I also wonder, are we done with previous week high? The heavy short position on the COT could have a sell off for the first and then rally at the end of the week. Yeah, this still could be bullish. This is the next key level. Collision 15. Kind of stop here, but we didn't respect nothing enough to say it's a good reaction. This is the best reaction. 11 o'clock regular trading hours, previous week's high, and leave. The high today was created at 11, then we fell. If it is interesting too, same thing with the NASDAQ. Looking at this because it's the heaviest weighted. Still got my target up here. The heavyweight slowing down as well with earnings approaching soon. I still expect a rally into earnings and a sell-off afterwards. The way we starting this week, I would watch Friday low. We don't really need to retrace. We need a sell side liquidity sweep. Fair value for buying his way down here. Say something bad happens, and this is the best possible price to buy from. Let's look at the hour. Oh, it's the daily. It's the hour. So This is a new week opening gap that we've been playing with forever. We just left that level. 220 seems like sell side liquidity because we had this gigantic range expansion. Pretty sure there's a lot of stops here. So we can do order pair reversal here. And there's a chance that we could just stay in between and still in range until Wednesday and rally because we did that last week with the consolidation midweek rally. Since we're technically inside this range or not expanding, we can consolidate in the middle of this range. Liquidity in the range expansion, I think, is a good place to pair orders. Also, we can range aside the still range like we did on Nasdaq. Boom, boom. Here's the N15. Not really too much going on. We have been having trouble since we hit this new week opening gap. A lot of chopping and finally rejecting the level. Although still on the border. We get gold. Gold is interesting. Nice cool update. Closed above the down candles, but not the highs. Is this a Judas or the move? This is the target though. I saw liquidity 44, 55.34. Get it on the hour. This is the week before its previous week's high, which lined up with this week because this is the previous week's EQ. A lot of confluence right there at that level for that bounce. Actually, the bounce from previous week EQ is up here, I believe. Still in previous week's range. No major liquidity pool has been taken yet. The pair orders also Monday looks like engineering liquidity. I can see us sweeping both sides. Yeah, it's not that much dynamic of a Monday. And just a sweep below. We don't even need this anymore. We can still go higher. And this is the order pairing at 9 a.m. Previous week CQ, perfect bounce. After that first move, it really don't be nothing. It's truly summertime. Look at the bounce off previous week EQ, beautiful. Did the framework play out? Yes. What did we learn about pattern narrative or myself? I gotta focus on peace of mind more so I can be open to these opportunities without distractions. What will I watch for tomorrow? Higher prices on gold and lower prices on Nasdaq and Nvidia for order pairing. And that's that on that. Y'all have a good day. Peace.